The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, traders. Happy Wednesday. Welcome out to the Tradespoon live trading room, stocks and options closing bell. I hope you enjoyed I hope you got a long weekend. I hope you enjoyed the long weekend. 4 trading days. Woo, we took a turn. Kind of abrupt. So we'll talk about it. We'll talk about the implications. Now, here's the thing: is really this market has been somewhat tenuous. I would imagine if you have found yourself on the wrong side, it's probably not with a lot of risk on the wrong side. I mean, I take a temperature check of the room quite frequently, and caution has been certainly the theme, right? The flavor of the day for quite a few days. Always cautious on whichever side of the market we are looking at. It's so many unknowns and unexperienced, right? We're still not sure what have we shaken off all of the supply chain issues. You never know what's coming out of China if they have all of a sudden a shutdown and what that does. Inflation, every time it looks like it's under control, all of a sudden pops up a little. And now what? Now they're saying maybe we do need another half a point, which certainly the market's not going to like dropping to a quarter, only the rise to a half. We'd love to see it stay at a quarter. We'd love to see data support that. The labor market still staying fine, right? Staying fine. Good afternoon, John. Good to see you as well. As always, good afternoon, Phil. Thank you. Appreciate it. Hello to you, LK. Yeah, right. The situation in Ukraine escalating as Putin gives his annual speech and talks about nuclear quasi threats, stepping away from the treaty. I mean, certainly they weren't letting us inspect. I'm sure we did the same. No inspections mean they're probably violating it already. So I don't know. I don't know if that changes much of anything. But there it is. Yeah, there's a lot. We got to process it. We got to make sure that we're on the right side of it, that we're not just, I'll tell you right now, the traders I'm working with who are, showing the most signs of frustration, it's too much, right? Remember what I've said, or if you haven't been coming long enough to remember, one of the most important concepts, and that leads to one of the top mistakes traders make, is over trading. And so we bring it up. We say, well, one of the most common mistakes that new traders, and actually all traders, make is over trading. And so someone says, well, how do I know if I'm over trading? And for me, it's a matter of saying, if you don't know for sure that you're not over trading, you probably are, right? Which means you should have a real core grasp of market conditions at any given time. That's why we spend as much time as we do every day. What do we talk about? We're like, okay, let's understand the sectors. Let's understand the VIX and the sentiment. Let's look at the long-term trends. Let's look at the short-term trends. Let's look at volume and how it's playing out. Let's look at sector rotation. Let's look at major market comparison. Let's get all of these ingredients into the soup, and then we'll see what we produce. And then we can say, now I can decide, are my trades, days to weeks, hours to days, minutes to hours? Am I looking to put 12 to 15% at risk? Am I only looking to put maybe 3 to 5% at risk as far as portfolio heat goes? Am I willing to have more than 3 or 4 trades on at any given time, or am I going to limit it because there's just not enough moving outside of the breadth of the market? These aren't just guesses. These should be ongoing, dynamic components to your trading. How much risk? How tight are your stops? How quickly do you take profit? Are you waiting for 5 days, or are you going to take it after 2? If you wait until it happens to make a decision, you're reacting. And we don't want to be reactive traders. Be proactive, right? Be aware over the weekend of what is your overall perspective on the market. What sectors are you focusing on? Do you have stocks representative of those sectors in your watch list? Do you have, if it's bullish, do you have hedges ready to go? Are you considering any neutral trades in your portfolio management? It's this is the business. See it as a business. All the decisions, all the perspectives, everything along those lines. Okay, sorry, I've been rambling a little bit. I'm Scott, the head trading coach at Tradespoon. I've been trading for a while, teaching for a while. These are the disclosures. Be careful. Be careful. Manage your risk. Manage your psychology. Remember, we're not advisors. This is for education only. But we absolutely may have and probably have a financial interest in the trades we talk about. Okay. Let's get into it. Everybody feeling okay? Let me take one of those temperature checks and see. I mean, even today, we started neutral, it got bullish, and then it just is like, oh, can't hold on. The sellers are there. Are they there in huge forces? Well, we'll look at the volume and make a decision as far as that goes. But definitely, we are still seeing some situations that we need to be aware of. So what do we want to know? Rate hikes needed, ongoing rate hikes needed. There is discussions are starting to increase towards a 50 basis point hike rather than just 25, which is what we were hoping to get used to, right? Hoping to get used to. What else? That's mainly it. Double line Sherman Fed shouldn't push rates above 6%. Yeah, I think they should have a cap where they just kind of say, hey, when we get here, is the trend of inflation enough that we can let it go? Even if it's a little slower than they want, I think it's better to slowly recover from inflation than risk overcorrecting. Really grinding the economy to a halt, right? We do not want to see this thing turn into a double dip recession. That's the main it. How soon right? We know that there's going to be a debt ceiling. We know they're going to raise it, right? Toll Brothers stock jumps, so that's on our watch list. And home builders, we'll talk about if there's a trade there. We're already in a trade there. Inflation hits some states harder than others. What else? Almost all officials back quarter point hike. Only a few. I think it's going to stay that way. I think the market's reacting a little bit here. I think it's going to be another quarter point. So there you go. That's about it. Let's look at the calendar. Let's see what we've had, what we have coming. Yeah, really, that's all. Yesterday, not much. Today, although we had the Putin news of, stepping back from the nuclear accord. Is it an accord? Nuclear pact? Treaty? Agreement? FOMC minutes, that's what we're reacting to today. Tomorrow, we get some GDP numbers. Nice to see if the economy is still growing at a decent rate. Jobless claims still expected to be under 200,000. No concerns there. Friday, looking for consumer spending to increase a little. We're looking for income to increase a little. Prices, hopefully, to stay the same. They're projected to go up a little bit, maybe not too much. New home sales still look overall. We do have some pretty good amount of data coming on Friday, and then we have next week a little bit coming out. Tuesday's a big day. Okay, here's how the model sees it: SPY A grade, grinding slowly down. We may have a little bit of a pop up. We may grind a little lower after that. Overall, a little bit more into slightly bearish, right? Slightly bearish is now. So certainly the buyers, and this is what we talked about. We had bullish projections through here, but the longer it takes for this, and then it doesn't come, and then it doesn't come, and then it doesn't come, and it just sort of turns right. Like the model's saying, hey, based on what we had here, buyers are in control. But you can see that the model then adjusts the forecast to sideways and now is saying, looks like the sellers may have a run. VIX is elevated, John said. Agreed. Right? Agreed. This is SPY. Let's take a look at QQQ. Let's give it 3 Qs only. A little bit more negative even still here, right? And we've seen some signs in tech that we're like, hey, this is looking better. We don't love seeing this, but it's saying that we might have a tick up followed by the next leg of selling pressure down. Okay, DIA. Everybody have a good weekend. We had a snow day. We don't get a lot of snow days. Oh, the snowplow finally came. I got some shoveling to do. We got a bunch of snow, whiteout. Kids couldn't go to school. Anyone else have crazy weather? Nice weather? 75, not bad. Okay. DIA, pop up, drop down, mostly neutral. IWM, probably more of the same. So a lot of slightly bearish to at best neutral forecasts. You can see the IWM, well, it's looking for some volatility here, but still saying that there could be more selling. I would say overall, very cautious from what the model is telling us. The sellers have shown enough that they're influencing the model to the downside. Seasonal charts, what does it tell us usually happens? February, sometimes we have a little bit of a bounce up. That's what the model says we might have, followed by a drop. If it does this, I'm still okay. I mean, it can't do this because we're a little lower than the prior low. So, but it does say that we tend to see some sideways action late February through middle of March, and then we tend to ramp up to get some strength into the spring. So I'm not betting bearish yet. I'm saying, is there signs that say things have gone more neutral and even to slightly bearish? Yes. Am I bearish? By no stretch, right? By no stretch. Here's the heat map for today. Walmart, not great. Energy, pretty red. Real estate, pretty red. Semiconductors don't look good. Financials, I mean, it's across the board. You can see retail still kind of holding up, defensive and cyclical. Everything else is a little wobbly as far as that goes. We'll come back and do some sector rotation. Let's jump into a quiz. We'll look at the VIX. Okay, so here's the overall market. You can see even up to Friday, right? Now, what happened prior to Friday? Prior to Friday, we got a bullish signal here. We got it. We took some trades, I'm sure. I mean, I know I talked about a few that I took. It didn't happen while we were meeting. Unfortunately, we didn't build them together. But you can see they really didn't pan out. We got 3 days where it just kind of moved, but didn't really move. And then it started to fail. So what do? We shut them down, right? We're not riding them out. We said, if it doesn't do this, we close it. Here, we close it. What did this create? This created a lower high right there. We had a lower high. But even with the lower high, you'll notice this was a pretty strong support / resistance. I mean, I could even extend it back further still, right? Very strong level. When I talk about support and resistance, remember there's two concepts that I want to consider, and those are recency and frequency. So how many times has it, engaged at that level? How recently? And you can see we had 1, 2, 3, 4, and then they were there for a 5th time. So yeah, I looked at that and I thought this could hold. It didn't. Yesterday it gapped down on the news. It sold off a little more. Today tried. It's a little further. Okay. So we definitely had a break of that support level. You would also, let me change colors so it stands out. You would also have to acknowledge that it broke here. Now, the day before was sitting on it like it was a little under, but it was right at it. You can't really call that a break, in my opinion. But the next day, it clearly broke both diagonally and horizontally. Okay, it broke. What else do we need to know, though? We need to know, did this break that happened here occur with big volume? The answer is no, right? It's not one of these, like back here, that occurred on big volume, right? It's you can see, when we have the big breakout selling times, typically you're going to see big selling volume kicking it off. But we didn't see that, right? We did not see that. So it puts us in a tough spot, right? Like, it's not like, oh, look at the smash and grab the sellers have done. But they did break support. We are at a, right? We've actually even taken out this level here today. So even though there's not a lot of volume, you have to acknowledge the fact that we broke support. We've come down to some extent. Okay, so now what? So a couple of things. Number one, if you had or have some level of hedging on, whether it came from a lower high on the SPY, whether it came from the VIX, whatever it came from, you should be thinking about how you're managing that. Now, for me, if you got it on up here around, let's just say even the 410 level, not even necessarily 413, at 410, one of the first things I'd be thinking about is, well, let's say, yeah, actually, I'm going to go off of 413. Even if you got in at 410, I'm thinking 5% off of the high. So if I get a calculator out here, let's say 413 times 0.9, whoops, that was not what I meant to do, 0.9, 5, 392.35. That's 5% off, right? 5% off puts it down in this area. If it gets there and you have hedges on, that 5%, if you haven't already, that's a great place to take some profits. At the end of the day, I'm always with a hedge thinking if I can catch a correction, right? A correction is 10%. So 10% off of 413 is putting us down at 371. That's clearly. Now, if I say 371 and then I look and I see that there's a low here at 376, guess what I'm going to do? I'm probably going to take another chunk at 376 if it got there, right? And then lastly, does it run a little further? And here's something I was thinking about this, and I was in a coaching session and I talked about it. One thing you can do is look at your hedging over a period of time. Look at it for 2022 or the last month, or you want to look at your hedging over a period of time, and you want to look at your portfolio for the same amount of time. If your portfolio was highly profitable and your hedging was break even or even lost a little bit of money, I'd say that's fine. Acceptable. The hedges, right, allowed you to do very well with the portfolio. Now, if the portfolio's up marginally or only a little bit, or the portfolio is neutral, I would expect the hedging to be profitable. That's the whole point, right? So if you look and you're always losing money on your hedges, hedging isn't really working. And you need to reassess. I'm not saying don't hedge. I'm saying reassess and build a better plan how you hedge. And part of that is you have to know when you're going to take profits on hedges. You can't just be like, oh, I'm hedged. For how long? If the hedge is up and is profitable, you don't want to just let it disappear while the portfolio recovers, because as the portfolio recovers and the hedge loses money, now you didn't recover, right? So think about that. So you have to be thinking about, what are you doing with the hedges that you're in? What's the next trade you enter? I don't look at this and think to myself, I mean, like we said, 5% puts us down around this level. That's only 6 more points. It's already fallen 15 from its high. 15, 6 more. There's not a lot of meat left on the bone. So if you're bearish, you're probably already bearish. If not, you're probably thinking, okay, what's next? What's the next trade? Is it another bearish trade? Am I going to trade anything to the upside for a bounce? Am I going to see if it bounces up to the underside of this and then drops? I'll definitely get more bearish then, right? So if the next thing we're thinking is, does it stabilize, come up here, and then roll over? Yeah, then I'm definitely thinking we're heading down here, and now I want to have some and get some more, right? And so that's more hedging. That's now all of a sudden you're talking about speculating. When we say hedge, we're hedging because we had bullish trades on, probably, right? At a certain point, it's not hedging, it's just speculating. You're adding to your hedges as a speculative, now with speculative money, and you're adding speculative trades to see, do I catch? Oftentimes it's the second leg down that's worse, and then that gives you your correction, right? You can see the same thing happen here. First, boom, second, that was the big one. So we're kind of thinking, is that what we're building towards here? Be water. If it says bearish, we're bearish. Now, it could also potentially catch this level and make a run back up for some type of a double top play, right? In which case, you'd be thinking, how do I manage my hedges and Am I interested in putting on a bullish trade? If all of a sudden I'm bearish, am I interested in becoming neutral for the possibility of this bullish bounce over here? So then you have to decide, are there bullish trades, right? You're a chess player, 3 moves ahead at least. What are you doing with the hedges you're on? Are there any new trades to take? Are there potentially bullish trades setting up on the backside? And what does your next round of bearish trades look like? And if in 2 days I need to reassess, I'll reassess. But I want to have a plan in place to see what my what ifs. What if? Too much coffee. Catch So, okay. Quiz. Here's the quiz. Where are we now? Let me zoom in a little bit here. C's, it's got to end low. You're down here. B's, we're going to see some recovery. You're through here. And A's, you're up here. Okay, what do those numbers equate to? 397.5 by 398.30. So it's only an 80-cent range. ABC. Give it to me. John is a C. LK is a B. Phil is a C. Brad is a C. I think the sellers are done. I'm going to join LK. I'm going to be a B. We might even hit A territory, but then fall back in. I think this is what you can see. We're very close to where we were back here when it started, and then we fell back and tested it. It's trying to hold. I'm a B. Okay. Anybody else want to get in while the getting's good? Do the kind of open flat. Buyers tried. And then when those minutes came out, it was just like, perfect. Let's go on. Let's move on to the VIX. Okay. What do we see? Now, this is where it's tough because this was not, it technically was higher than this, but we had a little bit of an intermediary point through here that actually caused the hedge, right? So we had that. Now, I would never fully remove all my hedges until I'm going to draw it in red. I might shed a few, but this is the line right here. That's the one that has to be crossed to be like, yeah, okay, we're out of everything. Other than that, I'm probably going to have at least some piece of what I've put on still in place. So you can see this was, a difficult one. It definitely had a big day there. What day was that? Today is Wednesday, Tuesday, Thursday, Friday. That was Thursday. So we didn't talk that day. But we did talk about if there was hedging to be done. John said he did. I know I did. But marginal, right? It wasn't I might have even done a half, I think. And here we are now. We're sitting up here at 22.5. That's not that high, right? That's not that high. That's still well within this range back here. If we come down and then we come up and then we drop, that's very bullish looking right there. However, in order to get that, You have to first get through this. If that happens, that's a higher low. From there to there, that will be hedged, because the concern is that at that point, we're either going to recover or we're going to crash. For me, when I see this type of escalation, it's this next wave that either like launches the spring. We already said that, early to mid March, typically from a cyclical standpoint, launches one of the better cycles of bullishness. That mid March to late April tends to be very strong, which is right through there. But at the same time, if the market sniffs out that things are getting worse and they start thinking the Fed's going back, certainly we could have that second dip. So I need to be ready on both sides. It could change very quickly. I might get this higher low right here in green, and then I hedge it. And if in 2 days it drops, I'm absolutely going to close some hedges, add some bulls, and then be very, very quick to tighten the remainder of any hedges that are in place, right? Without a doubt, that's got to happen here. Now, you'll notice that would be where, as of right now, we're still escalating with a higher high. So if this then turns into a lower high, that's when we start to see shifting. Right now, where are we? We're in a bit of no man's land, right? Does it look like it could keep going higher? What is the time frame I have here? This is 6-month daily right here. 6-month daily. And you can see that even though the market is down today, look at your VIX. The VIX is down 1%, right? Down 1%. Now, the VIX is sentiment. Our institutions we're down almost 0.5% on the SPY. Right? Almost 0.5%. So there's a bit of a divergence here. Now, do I think, this is a crystal ball, we're going to bounce out of this? No. Do I think we could bounce out of this? Yes. Why? Because the institutions, they're not fearful here. They're not looking at this. If I looked at this SPY, it was down almost 0.5%. And you said, based on that, Scott, what would you think the VIX is doing? I would say my rough guess would be up anywhere between 2.5% and 4%, the VIX. Up 2.5% to 4%, based on the market being down 0.5%. That's not a huge spike. That's really, but it would be up. That would be my forecast, meaning that the institutions are a bit more fearful and they are acquiring more hedges. They're buying puts. They're putting upward pressure on the prices of those puts because they're buying more of them. They're not doing that. In fact, it's the opposite, right? What this is saying is that the price of the puts have actually come down a little from yesterday. Earlier in the day, they were a little higher, but they've come down. So there's not a big rush of people to buy more puts. In fact, it looks like from this perspective, there's a bit of a capitulation. That they've stopped. It's eased right at this previous level in here. So if that's the case and we turn around and come back, that's setting up into, right, which means I'm very reluctant to try to do anything bullish. I wouldn't put any new bearish trades on in this. I'm thinking about managing the bearish trades I have. I'm thinking, are there any hedges that are starting to get a little older that I can say, hey, you know what? I'm back to break even on a trade that I didn't think was going to get there, or I've got some profit, but the time value is starting to ramp itself up. You're looking to manage based on real-time circumstances any hedges that you have. You might have hedges from 3 weeks ago that are still sitting on play. So be thinking about that. Do you put any new bearish trades on? For me, the answer is no. I'm not going to put new bearish into a divergence on the VIX that shows less fear. I am thinking about the possibility of a bullish trade. Absolutely. Is there something that I want to put on? So that's what we'll be looking for through here. Is there something like that in place? Because the bearish should already be in place. I don't think there's a lot of upside for a trade going south. Okay, let's go through the watch list and see what we see here. Yeah, you can see Alcoa Materials really showing a struggle to try to come out of this, right? So they broke support, this support level right through here. You can see it's tested and failed, tested and failed. If it can't get through here and it starts to roll over, then yeah, I definitely think that there's some bearishness for materials, and we could see this thing drop back here towards this 42.5 to 45 level, right? Apple. This is a hard one because I usually give it like one, like this was the old high. You can see we're a little below the old high, but we're definitely still above this level. I would actually be okay with this. Apple is still one that I would consider bullish. Like it just sort of had one meandering journey along the resistance here and then pulled back. Overall, still seeing this thing up. You might take a step back and say, how does this look? Well, it looks like a bull flag. Right? When I look at the weekly chart, I think, oh, this looks pretty good. We had a nice pop up 4 weeks straight. Now we have a few weeks of pause, and it hasn't pulled back very much. So if it pulled back a little more and started to turn, do I think this thing could? Yeah, I think this looks fine for a bullish. This looks very much open. Okay, let's get back. So that's on my list. ADI, earnings were great, and now it's just sort of fallen off. Same thing, not a ton of volume. Yesterday was pretty bad, but you can see we're still holding this support level. I would definitely say ADI is on the table. Still has potential. ADM, you can see that the consumer staples starting to go a little bit more sideways here, right? If we see the market start to show weakness, could this pop and start to move again? Yeah, maybe. And if I see that type of price action happen, maybe look to give it a shot. But for right now, you can see it's just really not doing much of anything but grinding lower. Chips, AMD, I like. AMD had me sold for a while, but it just sort of gave it up. I don't know. That's still a possibility for me. It's only below 1. This is still holding, and it's only broken 1 level. So I would say, there's probably going to be 4 or 5 chip stocks, all of which look reasonably attractive and showing the same possibility. What does that mean? It means if you were going to do it, you would pick one chip stock, whether it's an individual stock, the ETF. You're not trying to trade a bunch of the same industry group. Amazon looks a little weak. You can see it tried to hold. It went up, broken. Now it's here. I don't like it. AXP looks fine. Right? Financials. AXP looks pretty good. Made a new high. We had a bit of a sell-off. No substantial increase in volume. A lot of things sold off. This is 7 points. That's not even 5% on this stock. Looks great. Put it on the list, right? Put it on the shopping list. Boeing. I'd actually say that Boeing is. You can see it's holding this support level. We did get a new high. Holding support. I think industrial still has some strength. I would say Boeing is a possibility unless Caterpillar looks better. I've definitely been a bigger fan of Caterpillar. Baba does not look good. My reluctance for Chinese stocks. We have this little surge here. Just kind of a blip, and we've given it all back now. So tried to sucker me in. It's like, hey, look at this momentum. Come on. Come and see. And I'm like, no, okay, I'll look. That's as far as it got. Caterpillar. Oh, see now Caterpillar's broken. The same kind of a setup as Boeing. Test, and it broke. I would say if there was an industrial for me right now, Caterpillar would be better. Maybe we'll see Deere, but Caterpillar at this point, I don't like the fact that it really broke that key level around 243. ConocoPhillips energy doesn't look strong right now. We had a lower low, buy a lower high, buy a lower low. Nothing much there for me. Costco tried. Costco tried, and it just couldn't, and it couldn't. It just couldn't do anything there. I closed mine yesterday. I didn't like this stochastics rolling over. Just but too many things that just sort of tried and couldn't, and then so it wasn't bad. Small loss, can't complain. No harm, no foul. Doesn't look good. I mean, maybe Deere. Maybe it gapped up. If this holds up, if it doesn't break below, I'd say anywhere between like 415 to 420. Maybe John Deere. I think John Deere and Boeing are the two I'd be looking at from that regard. DIA just kind of grinding down. Not much volume though. Disney not finding its footing. It looked like it was going to try, then it didn't. FCX on a slow grind down. FDX is one we've liked. That was one that I think a few people said they might have put one on there. It was looking pretty good. Moving, couldn't. A lot of things that were struggling probably got shut down yesterday. Maybe shut down the day before if you were getting impatient. Just a failure to launch right here, right? We had the higher low. We had the turn. Everything started moving like it was going to, and it just never really gained the traction necessary. FXI, lower lows. Gold, lower lows. I'm not, Goldman, I think AXP looks better, but this still looks pretty good. I would be not opposed to this. IWM, slightly lower low, definitely lower high. So you can see we may be in for something, whether it's a 5% consolidation. Now, if you're talking off of the highs, we've already done 5, I think. 5% here is 10 points, right? We got that there. 10% is down here. We're already off of this one by quite a bit, right? Jets. Not looking good. MasterCard. Definitely, I would say AXP much, much stronger. Meta wanted to hold up, but it's just kind of same thing. A little bit of a down. You can see that description, downward grind. Not a lot of volatility. It's not heavy sell-offs. It's just this. Buyers can't really find a way to come in. Sellers are somewhat interested, but not really. That's what we're looking for here. What's the story? Tell me a story. Marvell, I like ADI better. This looks a little bit more like AMD. But again, key level still intact. Definitely some weakness on this side. Microsoft, if Microsoft could stabilize now, I'd still be like, you know what? It could probably make a run back to 275. That's a 10% move, right? That's a 10% move. And at that point, it's a double top or it turns into some type of a triangle. I'd still be bullish more so than not on Microsoft. Netflix, not as much. It's coming down. Okay. Nvidia, I like it. Oh, Nvidia, is that today? I think someone mentioned Nvidia that said it might be the way the NASDAQ goes. Maybe I'm wrong. Oh no, there it is. John, you said Nvidia tomorrow. Yeah, Nvidia tomorrow. It's right at a key support level. If those earnings come out strong, yeah, you kind of got to decide, right? What are we looking for here? Okay. I do like the way that's setting up, but we need to see how the earnings come out. Oracle, kind of flat. QQQ, a little underwater. Starbucks. Starbucks. I will definitely check J&J. So you can see Starbucks had the earnings, and we're like, we don't love that, but we said they did enough here that if it does a higher low, which technically we're still at right now, if we doji, then turn, what's this going to do? It's going to turn, and we're going to have an entry signal there, possibly looking for something like that. I'm keeping an eye on this one for a possible entry. I'm adding it to my bullish entry watch list for potentials. Johnson & Johnson. I don't know, man. This is more than a slow grind. This thing is really, we're down at this point. Are we 20%? 180, 36, 150, not quite. 15%. I mean, it's down quite a bit. I'd want to see it stabilize. This is giving you a very nice, clear line of consolidation. What do I need to see? I need to see it break it, test it, hold it. At that point, I'm ready to go. Let's giddy up and go. Love it. Right? Love it. That's the only thing I'm looking for. I'm not bearish, so I'm not looking for bearish trades. Although I'm not really what I would qualify as bullish, but I am thinking that the next setup to be considered would be considering whether or not you take some bullish setups. So I need to have some bullish opportunities presenting themselves if that becomes the case, right? I would say this is probably not one of them, of the ones that we've seen, right? We liked AXP, we liked Boeing, we liked maybe Costco, right? Yeah, we have some things that we like. Did I say American Express? I did Microsoft, possibly Starbucks, right? There's still, and those are still the right areas. Those are some things out of chips and technology and financials and consumer. Do they put Starbucks as discretionary? I put it as a staple, but I think maybe it's a discretionary. Madness. NOC, Northrop Grumman. NOC. Well, there you go. Starting to show those signs of life, right? Where it broke the consolidation. It actually had a higher low right here first and turned. But if you missed that, it broke and then it had a higher low here. Yeah, at this point, I mean, at this point, it's tough because the whole thing looks like it's moved into one of these overbought situations like this, where it could go a little higher, but I would be thinking it's maybe hitting some resistance. If I could catch it on a pullback to 460, and my stochastics came down and did a bit of a reset, ideal. That's ideal right there. That's the next trade. That's what I tell people. Don't look at a stock and be like, yes or no. You might be like, nope, that's not a trade. It's too late. It needed to be 3 days ago. I agree. But don't throw the baby out with the bathwater. If it's something that might be tradable soon, be thinking about it. What does the next trade look like here? Is there something setting up that I should be saying, you know what, I'm going to watch this because a week from now, it could be right there, ready for me to take the trade that's next. Yeah? Yeah. Yes. It's on the island. It remains steadfastly a strong candidate for consideration. Okay, where was I? I was at Starbucks, I believe. So let's go to silver. You can see the materials really have broken and are starting a bit of a sell-off trajectory. You can see semiconductors. The ETF, it's close to that right there. I think I'd be more inclined to go NVIDIA if it holds ADI. Did we like Marvell? Marvell's, not really. So I gotta say, I like Microsoft better for technology than chips. But if I was gonna do chips, I would do NVIDIA or ADI. So semiconductors are a little iffy, as you can see there. SPY, let's see. Looks like we have, I said it might move up into the A territory. Where were we? We were saying it was 397.50. 397.50 by, I need to be on a 5-minute. I can't see it right. $397.50 by 398.30. Oh, it's right smack in the middle, right in the B range. What's up, B range? I think that's just me and LK. Anybody else choose B? I can go back and check. I think it was just the two of us. All right. May not. Maybe it sells off. Who knows? Let's go. Let's go see what we think. Only 4 minutes left. So yeah, we're already seeing the selling. You can see it's going to be below average. We've only got 4 minutes. 69 is average, or 79 is average. We're at 69. Maybe it gets to 75 when it's all said and done, but nothing there that says, "Oh, watch out! The sellers are smashing into control." Nothing there like that for me. Target. Target looked promising. Just kind of fell apart, choking on my coffee. I learned to drink better. Toll Brothers. I don't know. That's not really that big of a move. Toll Brothers really failed to catch like a lot of things did here. And then it broke to a lower low. That's still iffy for me. I don't know about that. Tesla looks pretty strong still. Sellers have a window. They're not really pushing it down. Very well could open up the next window of buying. UNG. Look at natural gas. So low. So low. Visa, I would say, is a possibility, but I like AXP better. The VIX, again, we're down 1.5% on the VIX. This does not look like a bearish day. There's not a lot of fear. We have had an acceleration, but it seems to be finding a level maybe where we transition down and we see, does it start to turn into the next higher low or the next lower high? A lot could be decided here in this window. I'm going to be very much paying attention to that. XLF. I like XLF okay, but again, AXP still my favorite. Industrials still look okay. That's why I like Boeing, possibly John Deere. Staples don't look great sideways still. Need to see a breakout before we do anything there. Consumer discretionary, you can see, has lost a little shine. Still some possibilities here, but it's getting a little iffy. So there we go. All right, let's go see who won the quiz. Let's go see who the winner is. it is. Look at that. I told you the buyers coming in, man. Did anybody go A? We could have a no winner day today. I don't think anybody went A. B, C, 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 B. No A's. But it's got to get above 398.30. At the risk, I'm gonna stall for the last 30 seconds because people always accuse me. Look at that, right? Just popped into A territory for the first time. We've got 25 seconds left. Oh man, I'm telling you, the A's are gonna win, and there's no A's. There are no A's. 390. Oh, look at the buyers. Look at the buyers. Right, I told you that VIX could mean. We'll see what tomorrow brings us, and then we'll talk on Friday morning. Today, there are no gold medals. We're all losers today. We are all losers today. Okay, let's see. Let's see. Make your decisions. What are you going to do with your hedges if this thing starts to go the other way? Are you going to trade bullishly? Are you going to wait for the next bearish trade? Think 3 moves ahead. Have a wonderful day. I'll see you Friday morning. As always, happy trading.